So Meta doesn't want Bitcoin on its balance sheet, Coinbase is another legal showdown, and Asia is catching up fast in the crypto trading race. Oh, and the dimension circle is eyeing a 7.2 billion IPO. Yep, the crypto war just went full on popcorn mode. And if you're sitting there wondering what does any of this mean for me, don't worry, we got you. Whether you are hodling a bit of Bitcoin considering your first Ethereum buy, or just trying to figure out why Sharplink dropped 26% overnight, this episode is your beginner-friendly guide to some very big moves in the crypto universe. In today's episode, we are breaking down 6 major crypto stories, all of which happened recently, that show where the industry is headed and what could be just around the corner. We will talk about why Meta shareholders slammed the brakes on Bitcoin, how Coinbase is trying to change the game in the courts, surprising drop in the US crypto dominance, big European stablecoin partnership you have probably never heard of, one company's wild Ethereum-funded gamble that backfired, and why Circle is making Wall Street blush with its IPO buzz. By the end of this episode, you will have a crystal clear view of where crypto is now and where it might be going next. Sound good? Alright, let's roll. Let's start with the biggest headline, Meta, the company behind Facebook, Instagram, and Metaverse, just rejected a shareholder proposal to add Bitcoin to its balance sheet. Wait, what? Isn't Bitcoin supposed to be future of finance? Well, apparently not if you are Meta. During their annual shareholder meeting, a proposal to hold Bitcoin, similar to what companies like Tesla or Strategy have done, was shut down. Hard, like 98% of shareholders said nope. Why does this matter? Because when big companies embrace Bitcoin, it sends a message. Hey, crypto is legit, but when they reject it, it raises questions about confidence, volatility, and let's be honest, maybe even fear of regulation. Meta's board argued that Bitcoin is too risky and that it doesn't align with their financial priorities right now. Which, to be fair, is kinda ironic coming from the company that tried launching its own crypto. So if Meta is out, who is still in the Bitcoin club? Stick around, we will touch on that later. Alright, shifting gears to Coinbase, America's biggest crypto exchange, and courtroom drama that's heating up. Here's the deal. A group of investors in Oregon filed a lawsuit accusing Coinbase of violating securities laws. But now Coinbase is trying to move that case out of Oregon state court and into federal court. Why? Because federal court might be more favorable to crypto platforms. Think of it like it's moving a game from your opponent's home turf to a neutral stadium. Coinbase argues that this isn't just a local issue. It's a part of a much bigger debate over whether certain crypto tokens are actually securities. If they are not securities, Coinbase wins. If they are, well, then we might see more lawsuits popping up nationwide. So ever bought a crypto token and thought, wait, is this just like buying stock? That's exact question courts are wrestling with, and how they decide could shape the future of crypto investing in the United States. But while America sorts that out, another region is quietly gaining ground. Let's go global. Here's the stat that should make any US crypto trader pause. As of this week, the United States now accounts for less than 45% of global trading in Bitcoin, Ethereum, and Solana. Translation: Asia is on fire. Exchange in South Korea, Japan, Singapore, and beyond are booming. This is a huge shift. Just a few years ago, the United States was an undisputed leader in crypto volume, but now Asia is eating its lunch. Why is this happening? Several reasons. Regulatory clarity in places like Hong Kong and Singapore. growing institutional investment, and 24/7 markets with deep liquidity. Meanwhile, in the United States, you got lawsuits, unclear rules, and headlines that read like courtroom drama. Real talk, if you are a crypto company and you want to grow, where would you go? Asia is looking more and more attractive. And speaking of attractive, there is a shiny new stablecoin in Europe getting some big attention. Ever heard of European CV? Probably not, but that's about to change. This week, a French banking giant, Société Générale, that's so gem, struck a deal with the Brazilian crypto bank BCB Group to distribute EURCV, a euro-backed stablecoin. Let's break that down. It's a digital coin tied to the value of the euro. It's regulated by French financial authorities and it's being positioned for institutional use. Think banks, hedge funds, and fintech apps. This is a big deal because it shows traditional finance, TradeFi, isn't just dabbling in crypto. They are diving with both feet. Why should I care? Because the more real-world utility stablecoin gets, the more normal crypto becomes. Imagine sending euros across borders in seconds with near zero fees, all while regulated by European financial institutions. Sounds pretty mainstream, right? But while some are building in Europe, others are, losing millions trying to innovate with Ethereum. Let's talk about Sharplink. Okay, so this next one feels like a financial soap opera. Sharplink, a sports betting tech company, just announced a new treasury strategy involving 4.25 million in Ethereum. Sounds cutting edge, right? Well, their stock dropped 26% right after the news. Whoop. The plan was to diversify their holdings, hedge against inflation, and maybe even score some PR buzz. But investors were not having it. The market reacted fast and not in a good way. So why the crash? Two big reasons. Investors don't like surprises, especially crypto ones. Ethereum is still volatile, and treasury funds are supposed to be safe. And imagine putting your emergency savings into Dogecoin, even if it moves, most people would say, you did what? So Sharplink may have a good intentions, but the timing, communication, and risk didn't land well. But hey, not everyone is losing investor confidence. Some are thriving, like Circle for example. Last but definitely not least, Circle. The company behind USDC stablecoin is going public. And guess what? Their target valuation is whopping $7.2 billion. That's not just big for crypto company, it's big for any fintech company in today's market. Why are investors so pumped? Three words: stable, coin, and revenue. USDC is used across DeFi, payments, trading, and more. It's seen as one of the most trustworthy stablecoins in a world where the trust is everything. Circle is capitalizing on strong demand and planning a US IPO, something that was postponed back in 2022. But now the market seems ready. Why does this matter to you? Because a successful Circle IPO could spark renewed interest in crypto investments, set the tone for future crypto listing, and give USDC even more legitimacy. Circle isn't betting on hype, they are betting on stability, and that might just be the smartest bet of all. Let's wrap it up. Here is what we learned today. Meta said no to Bitcoin, highlighting institutional hesitations. Coinbase is playing legal chess as it faces securities lawsuits. Asia is rising fast, challenging United States as the center of crypto trading. European CV stablecoin is a big step for regulated digital assets. Sharplink Ethereum move flopped, proving not all innovation is welcomed. And Circle's IPO buzz shows that market still believes in solid crypto infrastructure. The crypto world isn't standing still. it's evolving fast. Whether you are beginner or budding expert, staying informed is how you stay ahead. If you enjoyed this breakdown and want more beginner-friendly updates on the wild world of crypto, make sure to like this episode, subscribe so you don't miss the next one, and drop a comment. What story surprised you the most? Meta's Bitcoin rejection, Circle's IPO, or that Sharplink flop? Thanks for listening, and remember, in crypto, knowledge is your best investment. Until next time, stay curious and stay crypto smart.